All right, good morning, everyone. It is 8:33 on the morning of January 5th, 2023, and this is my pre-market strategy session. If you hear some noise in the background, that's my younger of two sons, Henry, who's helping me out
No,
with my strategy session this morning.
Daddy.
So we'll have to make this fast. Okay, so we had a jobs report out this morning by ADP. Private payroll growth surged by 235,000 in December, well above estimate, ADP reports. There was 153,000 increase forecast, and 235,000 were hired, obviously. That is good news for everybody who got a new job. Congratulations out there if you're one of the people who just got hired. Congratulations on your new job. Wall Street doesn't like it though, because what that means is that the Fed is still going to be hawkish on rates. So, yeah, and you can see here, let's go to the 10-minute real quick. And here in the pre-market, it's hard to see with these two, the line there. Let me get that out of the way. Oop, nope, not that one. Where is it? There it is. So the 10-year, it's most likely that the 10-year is falling. And actually, let's go take a look at the 10-year here real quick and see. Oh no, it's going up, but the 2 year is going up faster. Okay, so this is the spread on the 10-year, 2 year, and right now the 10-year yield is going up. It's just that the two-year yield is going up faster. And in the big perspective here, let me put that horizontal ray back in. This is the zero line is where the 10-year and 2 year equal each other. And it looks to me like we're setting up for another leg down, maybe to test this bottom down here, 899 points to the downside. So it is what it is. Now, I think my personal opinion is that Wall Street is going to shake off these blues. Wall Street is going to say, hey, okay, there are a bunch of layoffs forecast and so on and so on. But generally speaking, layoffs are good for companies' balance sheets and earnings reports, earnings statements, and you people getting more jobs, and it's going to kind of balance itself out. The only trouble is that
Daddy.
it makes the Fed
Stop.
more hawkish. Hey, son, Daddy's going to do a little bit more talking. Okay.
No.
Okay. So the Fed is more likely to continue to raise rates given this increase in jobs and income.
Daddy, you're noisy.
I'm noisy. And also, the $1.7 trillion spending package was just passed by Congress, and the president signed it while he was in the Bahamas. And so that puts pressure on inflation. Now, I have a bullish bias. I can be wrong. My bias, the reason I like to recognize my bias, explicitly state it to myself, is so that I know when I trade, I'm either trading in congruence with my bias or contrarian to my own bias. And it helps me trade, and it helps me be more profitable. So I am still bullish. It is possible we come down here and test this 259.73 area. And so I want to see today, and I want to see how the market reacts when it hits that level. If it comes close to it and then moves away, then I will be looking at getting into a long position down here near this 259, roughly 260 area. And the markets will be well into oversold on the short term at that point. And you can see pre-market here on the 10-minute, it's near oversold, and on the 1 minute, it is inside oversold. The same thing is true with the VIX, except for the other way. So the VIX is in overbought pre-market and is on its way into overbought on the 10-minute. So I'm going to let the first hour play out. Let the first hour of the day play out, and then I'm going to see where this thing starts to get support. And if it, let me just kind of draw some things here. So if it stabs back through, then comes back up, retests, and continues back up above its punch back through, comes down, drops below, pulls back up, retests, and takes off, I'll be looking for a long right here at roughly 260.5. Or actually wherever it is that it punches back up and continues higher. So in this scenario, if this was the dive below, punch back up, sort of a little dip after the punch back up, and then the next rise, in this hypothetical situation, it'd be at 260. So if I see that chart pattern play out on the 10-minute, that will be my entry, especially if it's coming out of oversold at that point. If the 1 minute and 10-minute are coming out of oversold at the same time that the VIX is coming out of overbought, I'll make that trade. Yeah, I'm still bullish. I know it's totally, the trend is bearish. Get back over here. The trend is bearish, and so it's very contrarian.
No, it's not a trade. That's a Milner.
The higher probability trade is.
That's a Milner.
The higher probability trade is.
Milner.
The higher probability trade is bearish, definitely.
No.
I'm just looking for a contrarian play here.
No.
Some kind of
No.
evil short squeeze.
Stop it.
Okay, so there's more data coming out later in the day today too.
Daddy.
So at 1:30 we're getting the initial jobless claims,
We're not sure.
and then continued claims come out at the same time.
Daddy.
At 1:30, here it is right here. Continued comes out at the same time at 1:30, and so I might be in the afternoon session to trade the afternoon session today on continued claims and average. Let's see, initial and continued at 1:30 today to see if that offers some support for the market. Because if those are going up, or if they're staying steady and going up, then it'll offset this morning's report for the surge at 235,000. If it comes in less than expected, then prepare to get really bearish, because Wall Street, the old saying goes, don't fight the Fed. And so if Wall Street is projected to get aggressive on rates for a longer period of time, then the markets are going to take a hit. So it'll be an interesting day. I think it's going to be bullish in the morning after we get whatever kind of a draft down we're looking at this morning, after we kind of hit the support, and then at 1:30 we'll find out whether it's going to be bullish or bearish for an extended period of time. All right, everybody, good luck out there. Keep your risks tight. Click like, share, subscribe, leave a comment, tap the bell. Thanks for tuning in.
Stop it.
I will see you at tomorrow morning's strategy session. I am out.
Good.